Good evening, everyone. My name is Rob Clayton, and thank you very much for joining me to the USGFX Traders Club market analysis. I hope everyone is well and had a great weekend. And kicking off, good evening, thank you. And kicking off with the week, we've got a very light economic calendar. From what I can see is that the markets are mainly looking at some of the situations that are happening in Europe. And one of those situations is that the market is very nervous in regards to the Turkish lira falling to a yearly low. But then on the flip side of that, the dollar index did post a yearly high as well on Friday. Excuse me. So just to begin with, though, I'd just like to make a note that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration. So yes, from what I can see, that what triggered it all, though, was President Trump did approve high steel and aluminium tariffs on Turkey, which did give the US markets a bit of a jitter on Friday and sending the Turkish lira sharply lower. What is interesting, though, is that the Turkey's GDP is around 860 billion. Now, when you put that into equivalent, say, to Apple, Apple's worth 1 trillion. So Apple company is worth more than it's greater than the Turkish GDP is. And but still, the market is a little bit nervous, purely for the fact that the dollar is strengthening, and it has rattled some investors with the market in the US slightly weaker. And along with that is that geopolitical worries also come after China last week said they're imposing tit for tat additional 16 billion worth of tariffs on goods. But overall, from what I can see, it's just turning into a bit of a game between the two of them. The other thing as well on Friday was that the RBA released its quarterly statement on its monetary policy. And from what I can read into that is that inflation will remain stuck at the low end of the RBA's target range, at least until 2020, when they come out and said in the statement that they're looking to lower their inflation rate to around just under 2%. So despite the labour market tightening, however, the central bank sees the modest rise in inflation, which was most recently running around 2.1% and has been lowered now to around 2 to 3 as a target range in the next 3 years. But what is interesting is that if they're expecting to hold rates right until the around 19 or 2000 until 2020, is that the US would at least move 4 this year, 2 next year, maybe 3 next year, and then another 2 in 2020. So it's really going to put the bond differential between the two. But what I've found working in the bank is that when you start looking at interest rates, when they start rising in the US, they drag ours up with them. So it doesn't matter if the RBA did or didn't go, is that when they do go, is that the market would have already priced, the bonds would have already priced in because they're being dragged up with the US anyway. So, but I feel that the RBA is just a little bit concerned about the housing situation here. So I don't think they really want to rock the boat too much. And Governor Lowy has said that quite a few times. So that was the only other thing I think was worth mentioning at the end of last week. And so with all the markets moving, we should be seeing a bit of a different pattern now in most of my calls have come pretty much through. So one was the dollar index, eventually taking out the indefeatable level of 95.40. The Aussie fell from 74.5 after printing a high of 74.52 and quickly moved away from there and plummeted and nearly reached its objective of 72.55.65 after posting a low on Friday of 72.79. And also the euro against the dollar is that tumbled through 114.85 and now has 112 exposed. But we can get to all those levels in a minute. So let's quickly get through the economic calendar. Tomorrow we've got the figures out In China, they're very light. The ones that are in red are a bit more concerning, but the ones that are orange. So we've got retail sales, unemployment rate, industrial production, and also the fixed asset investment. And they're all pretty much on target. Unless we get some kind of rogue number, then it's most probable that they'll be on the actual target list for the forecast, along with the figures that we got a bit further down with PPI and also money supply, which is very, very light data. Then we've got average earnings in the UK, looking at 2.5%. And wage price index 0.5, previously 0.6, so nothing really going to rock the market there too much. CPI above 2% to about 2.5%, so that's pretty much, I think the Bank of England would like to see that number come out. The other thing is we've got the core retail sales in the US, so they're looking at 0.4. With the that's the core, and the retail sale month for month is expected to be a little bit lower from 0.5 to 0.2. The rest of the numbers are all pretty light, and but there were a little bit of improvement, as you can see, from last month for the non-farm productivity, but not likely to move the market too much. No forecast with the oil. I think the markets will be remaining on a bit of a weaker foot for oil after it did take, was it Thursday, fell 3.5%, and took on the challenge of that 66. It did get to 65, 60 or 65 before rebounding slightly. I don't feel that the bulls have quite grabbed the situation to take it higher, and the market is still at this stage, it's on the shaky ground. We had a great figure from the employment change last month. It was 50.9, very unexpected. It didn't really send the market into a bullish spasm, but it did get up to back to 74 cents when it did come out. They're expecting a much lower number of 15.3, but the unemployment rate to remain unchanged at 5.4%. Then we got retail sales in the UK. That's looking to be a bit more positive, from negative 0.5 to positive 0.2. Building permits, I don't feel the market will be looking too much into that. But the unemployment claims, I think they'll be keeping a close watch on that. They're expecting around about the previous month of 215,000. No doubt the RBA, Governor Phil Lowe, when he speaks this week, he'll be talking like he has done over the same week, same old tune of no doubt my caption will be played against Sam, because he just says the next move in interest rates will be up, even though he does talk about other things. But the market will still be reading into what he has to say. It's unlikely he will change his script, so nothing new out of there. To round off the week, though, we've got Canada's CPI. They are expecting the next move in Canada to be a rate hike, so that's coming up for very, very soon. But as I say, this week's calendar is very, very light. So let's move on to the technicals and see what the market has for us for this week. As you can see, that the dollar index clearly broke that level finally of 95.40, and still, after Friday's posted high, it posts another high for today's session of 37. The high on Friday was at 96. I believe it was 96.27. So the outlook is still very much holding to a bullish case, and from what I can gather, it's looking at this stage to a target of initially 96.60, and I believe that we are heading clearly for 97 to 98. There will be a little bit of a pause in this pattern, so no doubt it'll probably go like sort of this, and no doubt they'll start building a bit of a trend here, and this will play also as a base around 95.40. But nevertheless, the trend indicator from the ADX is quite positive and strong, and still a little bit more room. Although this is quite high, the RSI, we can get a pullback to 50, which could see a little bit of weakness, but overall, the market is still poised for a further test up. This would see, in turn, of the euro looking towards its objective of 112.85. It crushed that level of 114.85, and now most probably any rallies, which if we see this week, would bring in good resistance around this level or anywhere around there. So now that we've clearly broken it, the market will be looking to sell into rallies. The RSI is a little bit oversold. The ADX is pretty much trending, but this is what's concerning, is the MACD is still in favor of the move to head southwards. So I still look. In all, the target is less than 100 points away. So most of my positions, I think I'm pretty square. We'll get to those in a minute. This is an interesting one. Here's the fact that the Australian dollar tested up towards that level of 74.55, 65, and before you knew it, the market fell quite quickly away from there and left the 74.5 level in a blink of an eye, posted an outside range day, and then from there it's reached its objective, which was at 72.55, 65 today, after posting a low of 62. One thing to note is it's not bouncing, and secondly is that this MACD line is turned sharply away from the zero, and from there, along with the stochastic and also a trend coming in back into play, is beneath 72.55 is at 69.5 objective. So quite a negative call, but nevertheless, it's after all these dojis, we have broken down, and from a technical point, I know we're oversold, but markets do tend to push. You can see here when it was selling off back in September in 2017 to November, is it kept in a downtrend. This trend is stronger than the previous one. It's been going a lot longer since overall the snappiness that we've seen of attempting to recover in a bull phase and failing. And also this sideways pattern could not break through 74.5. As well as that, the 60-day moving average is where I believe hedge funds use this average to shorten the market. And no doubt when it got to there, quite close to there, 52 was the high and 60 was the cap, is the market's fallen quite heavily. So, and you can see now we are taking on this level. So I'm still running into a negative phase for the Aussie, and no doubt when we look at some of these crosses, is the fact that the crosses are no doubt looking a little bit heavy when it comes to the Australian dollar. Over the last few days, I was pointing out the fact that I was getting a little bit concerned about this pattern on dollar yen, and my stop, well, I have been stopped out, and around 110. 25.35, anywhere around there. I was concerned the fact that the market was going to head towards this 110.15 level, and as you can see, today's low have been 10, so clearly reached it. So we can just change that to that. So 15 is just holding in there at the moment with a long-legged doji. Interesting to see if this pattern does close in New York tomorrow. There is some indecisiveness in the sell-off. Now, in the reports day, because we were breaking down, I said for an intraday outlook, I was going to be neutral and wasn't going to hold a view. And I still don't fully have a view as of yet. So I probably still won't come out of any kind of call at present for dollar yen. Because it's interesting to see that yen has strengthened, and also on the back gold has weakened as well. So it's just a bit of a mixed play here at the moment. So, but we get to gold in a minute. So my call on dollar yen. So if some of you guys want to play into the long side from here, do keep your stop losses very close, because it can turn into a bit of a nasty fall if there's no supports here, and the one I'm looking at is 109.40, but I don't have that call. I'm just speculating at the moment because the technicals are still remaining quite heavy, and it is also trending with an ADX. So in favour of the move, it still looks quite southerly and or southward, should I say? And so I'd rather sit out until I get some indication. With dollar yen, it's like the same old, where it will probably trickle down, and then you'll get one big bullish candle coming through. So that's what tends to happen with dollar yen. Like here, for instance, you've got this heavy sell-off, then we've got the bull move come through. So I'm going to see if we could. I'm looking out for that at present. My view on the pound was has slowly stepped lower and lower, and now 126, around 126.40, 60. The other thing that's interesting with the pound is that the concerns from both Lee and Fox, who said that he's most probable that there be a no deal on the table when it comes to Brexit. And also Mark Carney has come out and said not so long ago, about a week and a half ago, that he felt that it's highly probable that there'll be a no deal. So if that's the case, it's going to be a hard landing for the sterling. And when we look back on the recent moves in the past, is that that was Brexit, and we continued. Now this pattern's coming through. We could easily fall back down towards the 120 region. It's funny though how quick we've got here. It all began when Mark Carney said there was no hikes coming on the cards, and the market started to fall down quite heavily. And then after that, the market got more indication from a dovish, after the Bank of England did tighten the other week, is that they come out with a dovish statement, and which also kept the pattern. But they've reaffirmed that the fact that the market could possibly see a further weakness if we are going to see a hard landing for Brexit. So under 126, I've got a view down to about 122 to 123. So I've been working out some scenarios on this. If we get one, we've still got a bit more room to go before we can come out with that call. I'd like to see this level challenged and reassess in terms of how the market will move from there. The only thing that's concerning is we are oversold. Not so much on the weeklies, but also on the dailies. As you can see here, very much flat. But the trend is still quite strong, and therefore we could see a little bit more pressure coming through to the downside. The divergence at the moment is still valid for gold, and as you can see here from the RSI, still just holding in there. The MACD still supporting it, and also we've got the stochastic as well. So to initiate some kind of base, if we're going to trade gold, you've got to work out where the base is going to be, so you know where you're wrong. You've got to work out that. So my base is around 1180.90. And if we move to the weeklies, is that this, I feel, is where the market will probably bottom out. If you're going to trade gold, you've got to keep it in very, very tiny increments. The smallest, I always go very small, like 0.01, and average in. Now, what I mean by that is if you're going to buy, say, at 1,200, then the next buy, say, is at 1,190. Say it did drop $10. It has been known to drop $20 in a night. So I would have bought at the figure and then buying at 1,190. Then my average is at 1,195, and also very tiny increments. So you're not out the money so much, and you find that you can easily wear a little bit of loss until you work out where the base is going to be. I'm not getting negative at least unless we go sub 80. That's where my stop will be. But the trend is overheating. We are extremely oversold on the weeklies. There is divergence coming through here, as you can see on the dailies. So I would feel that there is a at least a bullish sentiment brewing in the corners of this market, and no doubt we'll eventually see a sharp turnaround. So as I say, I want to buy any kind of dip coming into this market, and if so, then sub 1,200. So this is the low now. So I'm buying probably off here today, but we could get to that in a sec once I start putting the orders on. As I mentioned, excuse me, earlier, that the 3.5% that we lost in oil, rejected off this level 69.5 quite a few times. The call was $66, and we did go briefly under there on Friday before posting a bullish outside range day, but needs confirmation. I'm not seeing any kind of bullish structure coming through. Also, there is a little bit of divergence here, but the trend is on the ADX is still okay to say that the market is still keeping to a slightly bear phase. The RSI on the dailies also is capping underneath that 50 midway point. So I'm still calling down. And at this point, 68.5 is where the resistance is, and then 69.5. But I feel that any rallies are still an opportunity to sell into. Still keeping your cards close. Don't put all your eggs in one basket. Leave a bit of room in case the market does stretch that a little bit extra to the top side beyond 68.5. If you sell somewhere around 68.5 and 69.5, your average is at $69, which is quite comfortable because you can see from the previous attempts around there, you can never get the perfect position, but you can try and work to a position that you feel comfortable with. And to me, if I can get short again around 69 to 69.5, that's where I feel comfortable with. So if you shorten the market around 68 and then wait until 69, then you've got 68.5, and then of course, if it goes up a little bit higher, you can average in a little bit more, but not putting all your eggs in one basket, because I say, because market still can reject from this 69.5. But I feel if you move this in around 68.5, that's where the market fell previously. So, and all it's done is retraced 50% of its losses. So I'm still expecting to see a fall beneath 66 on a close in New York, would confirm 62 as a target. The other market that I think that we are ready to see a fall is Bitcoin. Now, I was playing a little bit of a short from that market not so long ago because the technical implications from the MACD, you can see here it topped out around the same time we were getting these spikes, and the rejection from 8,500. We've got a fall, a gap, we tried to retest it and fell heavily, but it's respecting this 6,100, which was previously in July, and it was a little bit choppy, but still near enough held there. After the market gapped above there, tried to fall away, and then rallies. What I'm expecting to see, and this is something that the markets are looking for, if you look back last year, the market got long. This is where the market was long, around here. And ever since then, it went in a free fall, respected this level down here, which is where the market's holding up at the moment, which is around 6,000 to make it easier. But the indicator here is very flat. Now, the markets, every time this market has tried to rally, is that the longs are trying to get out. There's a lot of people out there caught long, and they're trying to get out. And you can clearly see that every time, this point, and this point, is they're not getting out. If this pattern holds by the end of this week, my call is 3,000 for Bitcoin. I think the market's going to take back. Clean this up a bit. Market's going to flush out all the longs and fall towards this region. So this is the top. This is when it broke, retested it, and that's when you got that fresh rally into an exponential bull trend. So that's where I think the market is heading, because the market knows from these patterns that it's long, and like most markets, to get it down there, they're just going to flush out all the longs and get it down to that level before buying it again. Okay, now just have a look at my positions. At the moment, trading is that these are all trades I put on a while back, the S&P and the ASX. The only trade I did, was showing someone was this dollar yen, which I didn't put a stop loss, and you can see has taken me into $1,000 at the money. But the other positions I put on, and I squared them up, then you can see is that I put a short position on sterling around 131 and took it back at 127.5. So it made me nearly $4,000 there. I mean, you can see when you're trading all different sizes, and also Bitcoin. So overall, with all the positions I put on, and also some of these I've put on with a client, but let's just go to the ones that I put on with you guys last week, and these are the ones I put on. These are the ones I want to concentrate on. So don't worry about these ones, because they're really just, that was just spec trades, and I'm not going to take any credit for those, because I was just showing a client when you're putting on different positions, different sizes, the risk factors of what comes out of this is they could have all been losses. But so as I mentioned, just disregard these ones, and let's look at the ones that I was looking at. So last week I put a euro on around 117, squared up at 115.5. I went short the Aussie around 74.12. I took that back at 72.77 off my target, so that closed that position out. And then I liked Euro Swiss going short there, and I went short at 116, and they came back in to take profit around 114.80. So quite happy to take profit there as well. So all in all, the 4 trades that I put on last week came through quite comfortably, so I was quite pleased with that. Okay, let's have a look and see how the markets are placed for this week. We'll come to the stock market last. So looking at dollar against the market at the moment is respected at level 129.60 for dollar CAD on the weeklies. Moving on to the dailies, is the fact it's rebounded from there and found a bit of momentum. And you can see from the MACD is giving us a buy signal. And from that buy signal, the market is actually showing a bit of upside pressure. And at this stage, still has room to get to the highs. Roughly of 132.70. So I most probably will, for the moment, just changing that lot size to the minimum, which is 10 cents a tick. And I want to buy it, and then go Control T and go to here. Now I'm going to play the stop around about 40 points. So my stop's going to be 131.11. And my take profit is going to be 132.66. Okay. I was saying last week that Kiwi upside potential was roughly just up towards this region here, because it doesn't like it. All the times it goes up there, it never likes it up. You can see clearly does not like it up around 112. And on the dailies, we're getting a bit of a sell-off. So no doubt, if we look at the Kiwi, it's playing still weak, but oversold. But the Aussies played catch-up, because if you remember, the Kiwi sold off first with a dovish statement came out last week with the RBNZ keeping rates on hold, is that the Kiwi did sell off quite hard. Now, from the topping out, the RSI is at the midway point, but the MACD isn't fully completed in terms of a sell. So could find a base just a little bit lower, around about 80 points from where it's trading. So unfortunately, I can't really put a trade on, because the risk is, from a technical point, from a weekly, hasn't broken down. So we can still trade in this pattern. But I still like to sell around 112. So I will put a pending order, because I think the market could easily bring this down a little bit around here. So around about 111.56, I'd like to shorten it. So if you just go F9, bring up pending order, and and sell around 111.46. Put a stop just above the previous high, so around 111.90, 892, and then take profit a little bit lower than this out here, 108.88. 108.88. Sorry, the wrong way around. So let's just copy that one. 1.0888 and put that one in there. I was right the first time. So why wouldn't you like it? Let's just try this again. Sorry. Try that again. F9, pending order, sell 11.56. Stop loss at 11.96. Take profit 108.86. Now that should work. Yeah. Okay. Go back to dailies. Kiwi CAD. Look at now. Dollar Swiss. What is surprising is that the dollar strength still maintaining is that dollar Swiss hasn't rallied as strong, and Swiss strength is still in the mids. The indicators are still quite flat, so it's just ranging. It's been ranging in this level of 98.75 to parity. Nothing ready to go on there, so I'd leave that one alone for now. With the Kiwi, I still believe the market's going to head lower, and to get some idea where we're going is that first of all was around 66.5 or around there and change. The market is heading now towards this region around 64 cents. So I believe that there is still at least another 100 or 200 points downside. But I would rather wait until the Aussie breaks clearly that level of 72.55.65, because the call for the Aussie, if I see a break there, is 69, and of course it would give a much more momentum for the Kiwi to sell off. But overall, though, it's not bouncing. If you like to trade the Kiwi, I don't want to put too many trades on. The market's already went short back here, so I missed it completely when it broke around here. So it's made at least 40% of its move. There's still a bit more to the downside, but it could get a little bit hairy inside there, so maybe just leave it for the moment, look for a better trade, which there should be. So with some of these Aussie crosses, you'll see, of course, the Aussie leg is the one that's moving these markets down. Unfortunately, 3 days out of this move, so nothing on Aussie CAD. There's the 2 days that you're seeing on the Aussie now is slightly basing itself as it's holding above 72.5. So 3 days there, nothing on that Aussie yen. Well, Aussie yen, when it took out that base, triggered off stops. You've got a doji in there, so a little bit of indecisiveness. I think if you look at the weeklies, you'll probably see. Let's bring this in a tiny bit just to see you get a bit more history there. There's still at least 150 points downside. Weeklies are just coming through to a negative. See where this market is on Thursday. If it's a little bit higher up around the 81, I would sell it, but 70 points higher. I will probably leave a pending order. So just go F9. Sell the rally up towards 88 and taking profit. I said about 100, so about 70, so I'm looking at weekly, 78.66. And stopping out roughly on the daily price action, half that candle, 81.32. So 100 points. But I will be lowering my stop loss if this market does tend to fall down. Place. Okay. CAD Swiss. Just coming into a bear phase. A little bit oversold. It's a shame. That was a little bit higher. But starting to trend a little bit. But the Swiss leg isn't really moving, so it's got to be the CAD. So, of course, with the dollar strength, CAD's weaker. So that's why we're seeing a little bit of sell-off here. So I'll probably, both legs don't support it. Again, with the two legs here, yen strength and CAD weakness, let's push this cross lower. But it's oversold, so I probably will decline at the moment. I don't think the market will be reclining though, so I would decline from any at the moment because it's already made its move. Swiss yen. This market's been short all the way through, and it did have two bulls, so too choppy for me to play. Okay, looking at the euro. Well, both legs have been falling quite significantly, so it's pretty flat. Again, flat there. Euro Swiss. Getting awfully oversold. Now my target in euro, as you know, is at 112.85. It could find some momentum there. So if some of the crosses are getting a little bit oversold, that may put the brakes on this sell-off at the moment. But it depends on the dollar index. That was, as I mentioned, a little bit overbought. So we can still get pullbacks. And don't forget, when you break a level, it tends to most often go back to retest it. So therefore, we could see a bit of a re-challenge at this level around 95.40 again. So don't discount that. So keep that in mind. That would bring in the favor of the possible rebound in the euro. So 112.85 could be a short-term base. Some of these crosses may climb out of their oversold condition if we do see that pattern coming through. So the euro Swiss could actually bounce a little bit from here. Euro sterling. Well, in favour of the pattern, I would say there is a bit of pressure coming through to the downside. If that's the case, you wouldn't be buying the pound. So the market could test this level around 88.60. So it's about another 50 points away. The RSI is broken down. There's a little bit, the MACD is still a bit stubborn here. So a little bit of weakness, but I'm not too sure on what kind of depth you'll get because little indication at this stage. The weeklies haven't fully broken down, although we did get a rejection from there, but it still looks like it's a bit of weakness coming into play, but not significantly. Well, of course, the euro yen has fallen the way it has because of the yen strength and the euro weakness, but we're oversold. So this market's been negative since back here, and that was around here, and you can see, of course, it's been more of a euro leg, and it's been pushing this down. So can't touch that at the moment. Euro Kiwi. If the RSI breaks this midway point, then there will be a bit more weakness coming into this play. for the downside to around 171.20. So I'm going to keep it very tight. I actually want to short this market. So go into Control T and put a stop on. My target, as I mentioned, taking profit at 171.26. 126 and stopping out just above that top side of the body of that candle, just where the two are, at 174.22. Okay. CAD sterling, so no doubt this will all look the same as the pound. Yeah. I can't really trade any of these crosses on the against the pound because it's oversold. I mean, look at the sterling yen; it's extremely oversold, but not backing away. But it's overeating on the ADX. We are low here. The only point I'd like to make on this cross, when it gets oversold, if it consolidates with a little bit of an impulse, it does get it out of its oversold, and then look at that, it fell away again. So I probably would refrain from trading this market. Kiwi yen, well, of course, with the yen, sorry, sterling, Kiwi yen, sterling against the Kiwi. Nothing there either. Okay. Let's see what else we have here. Kiwi yen, still oversold. Kiwi Swiss, oversold. Okay, let's have a look at the stock market now. Looking at our market, well, if you have a look at the benchmark, the ASX 200, the base was at 6,240. 39 was a low today, and it bounced slightly. I believe the market is still breaking down, and as you can see here, potentially through 62.30, I expect to see further weakness. Now, with this whole play over the last, say, 15 days, is that we've got dojis everywhere in here, and what is one notable thing is that the market went short here and maintained the shortness ever since. It's been choppy, but it still doesn't want to give us a buy signal. So I still believe the market can break down at least another 100 points. Unfortunately, though, if you have a look at the position, I'll just get out of that one, is that I've already got the positions on. So, and they're a little bit out of the money, so I'd rather just leave them. If the market is going to drop as much as I think it is, they'd be in the money. So, but I put those trades on when I was talking to a client who had interest in the US, and I was saying that if you look at the S&P market, it was breaking down, and you can see we have got a sell signal, and everything's in play for a further weaker price action coming through. My target at the moment for the S&P is around 2,770, 80 level, and you can see here that's down here. So where these tops are, this base is troughs. So this is where I think the market can sell. So that would keep in line with the rest of the calls in Australia. And also the NASDAQ is breaking down as well and really struggling. And the market's losing a little bit of faith in some of the situations that are coming through, like Facebook losing 130 billion of its value in one day. Amazon struggling slightly. Only Apple has got to the 1 trillion club. The others haven't quite got there yet. Microsoft and Amazon still not quite there yet. And also, let's see what happens to Tesla. He's been investigated because there is some story out there saying he manipulated his shares by saying that he's going private, and he's already got the investors. So, or something along those lines. So, I think the NASDAQ has hit a top, and where we're looking for, well, if this is anything where to be calling a double top, is the base would be down here. So at the moment, the call is to be short NASDAQ and look for a pullback to about 7,185. We have, from a technical point, kept all in play. And I'll put the position on, Control T, and modify. So my stop's above 7499. It's a little bit higher up, but 499. But I think the take profit's going to be 7196 for now. Okay. Just before we wrap up, is there any questions for tonight before we come to the conclusion? Did I leave any markets out that you guys are looking at? I think I covered all of them. Sure. Let's have a look here. Well, looking at this daily, the fact is there's a lot of dojis inside here while this market was going flat, and then we got this move finally. You look at the bigger picture. Well, the primary trend is broken slightly. This MACD's come through. So looking at the monthly, we're moving slowly into a bit of a bear phase. The RSI is broken through here. So everything's in support of a move down. Does the weeklies tell me the same? The last 2 weeks have, yes. Broken through the RSI there. So the dailies. At this point in time, I think there was a bit more leverage to the downside, but it will probably start seeing some profit taking as it gets closer towards 21,700. But the bigger picture, the broader picture, I would say that's not the base. The base is more to the fact that we're probably looking down here around 21,500, I'd say the base is. So there is still a little bit more leg room to the downside, and two very severe moves. So it's likely to continue on. For the first target, I would say that you're looking at is, let me just squeeze this up. I need a little bit more information. So the first target is around 71,800, and then I'd say there is more room down towards this region. So if you're short, I would probably take a little bit back, because you can't discount some type of rebound, and those rebounds can easily see somewhere to test this break line that was recently broken here and closed. You can see the body was underneath there now. So I would look to sell rallies towards this region. Anything with 2,200 written on it. Sorry, not 2,200, 22, 22, should I say. Let me have a look. Oops. F9. So any with written with so 22200. I'll be looking to try and shorten this market just underneath this trend here, and then I do expect to see further movement to the downside. You can see here the candle has actually come back slightly bullish. A little bit of divergence here on the 4-hourly. You can see here from this point to this point, and this candle coming through, so clearly could get back up to around 22, and then sell the market and look for a further move southward, because the broader picture is still quite heavy, and especially with the broader picture, the primary trend broken, and the weekly is breaking down as well. Is that the whole movement of this structure of the recent attempts to climb higher have just not been able to do it ever since we've got this peak around 22,860. Is that the market has struggled, and there's a lot of dojis in there, and then there's a slight free fall. So yes, I would like to see that come in and sell rallies. Well, when it comes to Trump, you'll probably find that he's still you can't rule him out because he's unpredictable, and you'll find that when it comes to what's going on with Trump at the moment is that he's looking at, from what did I write? I wrote something here the other day. So what he's done with when it comes to Canada is he wants to what did I say about Canada? Here we go. He's still putting he's going out with the tariffs now. He's gonna. I think one thing he doesn't understand is the fact is that he's putting all these tariffs on. It's going to hit their GDP, and if that does happen, then you'll probably find that it will. If their GDP does start to change or start to wobble a bit, it probably could start playing around with inflation a little bit. So, but you can't tell him. And now he's got this other lady who's quit, who has just brought a book out on him. So, I mean, yeah. I know some people like to trade the Trump when he comes out and says things, but from the tariffs that are going on, well, I don't think it's going to stop there. So, and don't forget, there is still the comments from a week ago that the CIA reckon that North Korea is still carrying on with their nuclear program. So Trump has been very tight-lipped on that. He hasn't tweeted about it. So obviously, the last tweet he did write about Kim Jong-un was the fact is that we can sleep very safely and soundly now. But so there's still more news. But I think this this Turkey issue is causing a bit of a stir in the market. This with the Turkish lira recording new low against the US dollar, it's caused a bit of a problem there. And from what I was reading is that I put in the report today that they owe quite a considerable amount of money to three of the banks, to which I can't think of it, wasn't there? It's in the report today. I put in the report. So it was with this, I think Swiss Bank, the Euro. It was three banks that they owe something like about $140 billion each bank. So if that does start coming into play, and we do see more weakness, and as I say, their GDP isn't. I mean, Apple's worth more than their GDP. So bit of a nervous tread into this week, as the economic calendar is a little bit light. So they're my trades for this week. As you can see, I have left the Aussie out for a reason, although my call is to sell underneath 172.5. I'd probably wait and see the break there. I haven't put the Euro on because the Euro might bounce a little bit from 112.85. So the other trades I've got very light at the moment. I think by about Thursday, I think there'll be a lot of trades to put on because most of the markets probably will start. If we are in a bear phase with the Aussie further, then we can see the Aussie fall more, Euro fall more. If the dollar index does move further to the upside, then it will put the rest of it in projection. So, well, that wraps up for this week. Well, that should I say for tonight, that is. Don't forget, we've still got the USGFX Traders Club Masterclass. Now, this Thursday, I've put a presentation together, and it's all about the use of the MACD and the RSI, because I've had a few questions just recently. Some people are still not quite getting when to put a position on when it comes to both indicators in line. So I've put a short presentation together. So that would be for this Thursday, if you'd like to come along and learn a little bit more about when to enter or when to exit or when to cancel the trade if it's not going in, or if it is going in your favor, but you're seeing some warning signs, and I can explain a little bit more on how those two indicators work. So that's for this Thursday. So if there is further ado, if there's no more questions, I shall bid you all a good night. Thank you very much for joining me this evening. It's been an absolute pleasure to be able to express and share my ideas. And if you've all got a screenshot of this, I shall close this up. And again, watch out for that dollar index, and also look out for the euro at that level of 112.85. Look out for the level of 172.55. And I still like to buy the gold. I believe it's still on the lows, as it's now testing the lows of the day of 1,200, as you can see there. So this is where, actually, just before we go, so I want to buy sub this level here. So I should put the trade on 0.01. So buy it here and then go control. But as I mentioned before, I'm not going to stop out until keep this one tight, 88, but I will be buying again. Let's stop, sorry, we'll stop it the other way around. 188 and 1, 2, 16 for now. So that's my other trade I like to put gold on. We'll be buying towards the bottom side around 1180 to 85, but for now, we just put this tiny little trade on just to see how it goes. That's my other trade. Okay, that wraps up. Thank you very much for joining me this evening, and I bid you all a good night, and I look forward to speaking to you this Thursday. And do keep an eye out for the reports, because I will be specifying in terms of the markets in what's broken down clearly and what hasn't. So keep an eye on those, or visit my webinar, which released every morning or so. So have a good night, and again, thank you for joining me this evening.